Hello, traders. Gary Wagner here. Approximately 12:20 in Honolulu, 6:20 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd day of October, 2021, and this is the daily report for gold and silver. This first chart that we are looking at is a 15-minute candlestick chart, and it is clear to see the effect that concerns about inflationary pressure caused gold to rise in early trading, that is this area here, and then statements by Jerome Powell in a 45-minute period took gold from the intraday high above $1,815 to the low of the day, which came in at $1,783.40. It will be the first chart that we look at on today's show. Also included in today's report is an interview done yesterday afternoon. As I mentioned, the first chart that we are looking at is a very, very short-term candlestick chart, each candlestick representing 15 minutes in time. You can see the arrow right here. That comes under the beginning of the trading session, representing October 22nd. You can see that for the first hour, hour and a half, the market really traded sideways before having a defined spurt over a 2.5-hour period, taking it to highs near 1814. That is these three candlesticks right in here. And at that point, we had Chairman Powell begin to speak virtually at a conference. We can see the effect it had in 15 minutes times 3 or 45 minutes total, taking gold pricing from the intraday high above $1,815 to the intraday low in this short span of time. What we saw after that was another attempt to trade to $1,800 over the next hour and a half. It was unsuccessful. It tested just above 1,800 briefly, but closed well below that. That is this candlestick right here. And then traded sideways before settling at $1,793.10. It definitely underscores what we have been talking about, which is the double-edged sword of inflationary pressures and the resulting actions that the Federal Reserve will use to combat higher inflation and persistent inflation. This next chart represents a daily candlestick chart, the continuous contract of gold futures, and you can see the expression of today's market move with this single candlestick right here. You can see that it is really a shooting star. You have the body size being relatively small and the tail above it being roughly 3 times that of the body size, and it does follow a brief uptrend in the market as we saw throughout the week. What it is signaling to me is a couple of things. First of all, we still have major resistance that comes in roughly at $1,800, but I have expressed a resistance line by using this top here as well as this top here to create our upper level resistance. And what is most interesting is the fact that the close in gold today came in just below that resistance line. It tells me that on a technical basis, these two levels, meaning approximately 1795 up to about 1805, continue to be, on a technical basis, major resistance. It also greatly illustrates the cross currents or the effect of higher inflation, because we definitely had inflationary concerns. Had the market closed here, we would have defined that as a breakout to the upside above multiple resistance areas, and yet a single set of statements by Chairman Powell of the Federal Reserve took gold back down below 1,800, not only that, below this resistance line. This last chart we are looking at is a weekly candlestick chart of gold futures. We can easily see that over the last 4 weeks, when gold started trading at about $1,720 up to the current pricing at $1,793, this week contained the largest weekly move out of those 4 weeks. For more information, take a look at the interview that we recorded yesterday afternoon. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.